We have Binance under increasing regulatory scrutiny for more criminal activities, and fraud being one of them, and therefore we have the competition to Coinbase. Really, we think it's disappearing, and so that's a good thing longer term for Coinbase.
The world's two biggest cryptocurrency exchanges are facing a regulatory crackdown, including allegations this week filed by the U.S. Securities and Exchange Commission that they are peddling unregistered securities. In an interview with Bloomberg Television on Thursday, Wood said that the increasing regulatory scrutiny of Binance was a good thing long-term for Coinbase. U.S. regulators have not filed criminal charges against Binance or any of its representatives. In March, the U.S. regulator for derivatives filed a civil enforcement action charging Binance Chief Executive Officer Changpeng Zhao and 3 of the exchange's affiliated entities with numerous violations of the Commodity Exchange Act, CEA, and CFTC regulations. Binance described the CFTC action as unexpected and disappointing, with Zhao saying in a blog post on the company's website that the complaint appears to contain an incomplete recitation of facts, and we do not agree with the characterization of many of the issues alleged in the complaint. Wood said Coinbase isn't accused of any criminal activity. Her comments come after her funds on Tuesday boosted their holdings of Coinbase as shares slumped following the SEC action. The 3 ARK Investment Management LLC funds, including Wood's flagship ARK Innovation ETF, buying 419,324 shares. Wood also points out that she's still confident in her $1 million target for Bitcoin, stating the more uncertainty and volatility there is in global economies, the more ARK's confidence increases in the token. Let us now get into the video as Cathie Wood explains why she thinks this is bullish news for Coinbase regardless of their challenges. As you listen, don't forget to hit the like button, subscribe, and drop your comments.
What we're seeing is that the judicial and legislative branches of our government, separation of powers, are starting to weigh in on this topic. And the regulator, the SEC, is part of the executive branch appointed by the president. And as we're seeing cases go through court in the judicial system, the the judicial system is questioning the SEC's decisions here. And so we think this is a good thing. We actually think this is going to be in the courts and in legislation for perhaps years. And what has happened in the meantime? We have Binance under increasing regulatory scrutiny for more criminal activities, and fraud being one of them, and therefore we have the competition to Coinbase. Really, we think it's disappearing, and so that's a good thing longer term for Coinbase. The more uncertainty and volatility there is in the global economies, the more our confidence increases in Bitcoin. And one of the reasons is we've just been through an inflationary scare. We think it was very much supply chain driven, and Bitcoin is a hedge against inflation. We also believe now that the bigger risk is deflation, not inflation. And why would Bitcoin do well in that circumstance? It would do well because it's an antidote to counterparty risk in the traditional financial system. On the Bitcoin blockchain, everything is transparent. It may be pseudonymous, but we can see all the transactions, all of the activity, and therefore we have a much better understanding of how little counterparty risk there is in the blockchain world. The SEC sued Binance on one day, and then the next day, Coinbase. And they were trying to put them in the same bucket. They are not at all in the same bucket. We have 2 former officials of Binance US coming forward, and actually we now understand that they have been working with regulators and the government generally to help the government understand how Binance US was not separate and distinct from Binance International, and how much CZ controlled Binance US, and how much of Binance's data was in China, and how much commingling of funds there were. Coinbase is not accused of any of this, and it is unfortunate that the SEC took action against Coinbase the day after Binance, and then seemed to muddy. Chairman Gensler, as he was on one of the major news channels, was trying to implicate Coinbase in the same way that he was implicating Binance. No, they're very different. There are questions about what's a security and about staking. Those are the two questions that Coinbase is facing and Binance is facing. But most of the other questions around Binance have nothing to do with Coinbase.
ARK is the fourth largest holder of Coinbase and has been adding to its stake on dips for nearly a year. Cathie Wood, the CEO of ARK Invest, has invested much money and faith in the U.S. crypto exchange Coinbase, but her decisions, according to a report by Binance Feed, might become a source of regret in the future. The U.S. Securities and Exchange Commission, SEC, accused Coinbase of not properly registering within U.S. regulatory laws. Furthermore, the commission blames Coinbase for prioritizing profits over investor interests and generating millions of dollars based on ill-will mechanisms that break regulatory constraints. And the market, as expected, responded with a fight-or-flight reaction that resulted in Coinbase stock losing approximately 13% of its value. Historically, the SEC has always been unreasonably harsh on crypto, whether justified or warranted. Additionally, the U.S. regulatory bodies create and impose confusing and somewhat absurd laws and definitions for crypto. Interestingly, even Cathie Wood recognized the regulatory threat that U.S. companies face. It's just maybe. She didn't anticipate the crackdown to happen that soon. According to Cathie's portfolio, she holds about 11 million shares of Coinbase stock. Correspondingly, her Coinbase holdings amount to third in weight across all her funds. And this, ladies and gents, creates a potential disaster for ARK Invest and Cathie Wood. Likewise, if Coinbase continues to lose in worth following this regulatory hell, ARK Investing risks suffering major losses. And these losses will hurt a lot if we consider the amount of faith expressed toward Coinbase by ARK Invest. However, as of June 6, 2023, Cathie Wood or her firm didn't respond to the breakneck lawsuit thrown at Coinbase or the subsequent price loss of Coinbase. Either way, it's already apparent that crypto in the U.S. sees and will experience struggle. Cathie Wood is an experienced investor, but her skill or strategy cannot account for the irrational witch hunt that the SEC organized. Wood has also faced criticism after her flagship ETF cut its holding in NVIDIA Corp in January and missed out on an epic rally that made the chipmaker briefly cross $1 trillion in market valuation. Wood has defended her decision, citing concerns over the computer chip industry's boom-bust cycle. According to Wood, Tesla, the electric vehicle maker, is one of the biggest artificial intelligence plays around. Tesla, with its 4 to 5 million robots roaming around the world, is collecting more data every day and has collected more miles of real-world driving data than all of the other auto companies and technology companies around the world combined, Wood said later Thursday in a video address to the Morgan Stanley Australia Summit in Sydney. Tesla's AI project would help scale autonomous taxi projects, she said. What do you think of Cathie Wood's stand on the Binance issue? Let us know your thoughts in the comment section below. Also, don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.